Ahoy there, traders! Hello, hello, hello. A few technical snafus just before we started, but nonetheless, we are live, we are recording. Hello, and Friday the 13th. Who's superstitious? Is anyone superstitious? Is it Black Cat Friday? Is it don't walk under ladders? I've never been superstitious, if I'm going to be honest. Tin Hat Friday, I like it, Tony. I like it. Yes, Tin Hat Friday. Why not? If there's ever a day to wear a tinfoil helmet, Anthony, it's today. I used to work with a couple of pit traders many years ago. This was for about 6 months back in 2001, back when pit trading was still clinging on to life. They used to trade in short sterling trading pits. I think the other one went between that and one of the bond pits in London. And they used to tell me, like, traders, certainly pit traders, were very superstitious. If they were on a winning streak, they would try and replicate the day. And it might be something weird ass crazy, like if they're on a hot streak, the hot streak started because they got pissed the night before, they missed the train into London, they lost a shoe on the train, so they would wear the same clothes, they would go through the same turnstiles, they would miss the same train, they would get absolutely smashed the night before in the same way, they'd drink at the same bar, they'd do the silly things that led into having that winning streak day after day after day, because they didn't want the shine to lose its shine. And I heard some absolutely weird things, like one of them would start a fight in the trading pits because his winning streak started with when he got into and they used to have have fisticuff brawls in trading pits, so they'd start fights because that was when the hot streak started. And I heard some crazy stories. Anyway, that just gets the day going. It sets the tone of the day, maybe. And let me just see if there's one or two that are still trying to log in, sending me a few messages. We've got Adrian, hello, likes to see all the regular faces. Brian, Anthony, Bruce, Enoch, great to see you. Jared, Ian, all the regular faces. Jacob, Jim, Kyle, great to have you here. There's a few names I can't pronounce, so if you've got a weird name, it's not that it's a weird name, it's just I'm ill-educated. I don't know how to pronounce your name. Ophelia, what a lovely name. Stephen, Stuart, you've got a lovely name as well, Stuart. Vito, and yeah, we've got all the regulars, one or two new names. If I've missed you out, I've just skipped down the list. It wasn't intentional. As I've already said, I can't pronounce some of your names. Nothing personal. It's just I already make a fool of myself. I don't need to double down on the foolishness. so nevertheless, welcome one, welcome all. And again, if I've not mentioned your name, don't worry about it. Nothing personal, except you, Anthony. It's always personal with you. Right, so let's jump in. So now or never. How do we find now stocks? We're going to look at our usual portfolio workshop. We're going to have a little look. We've got one or two things to look at. We'll have a look at the markets, what we're expecting. We'll look at the crazy stuff that was Monday. I forgot to update the thing. Now stocks, there we go. Let's have a look at that. So our usual agenda, we're going to look at the markets. We're going to do what we've been doing the last few weeks, which is kind of fuse the market overview with kind of some stock scanning. They're kind of the same thing. It's essentially looking over the shoulder as I would do my regular routine anyway. I'm just giving you the verbal commentary as I'm doing it. And what I hope that you see is that there's a consistency in the way that we approach the markets. We look at the market overview, we go and look at opportunities. And while I'm giving you this commentary, and I'm a talker, I'm very well aware of that, it takes longer to explain these things than to actually do these things. Most of these things are at the speed of thought, but it can be a 10, 20-minute day. And that's what I hope to try and condense it down. How do we find now stocks? I've got my universe of stocks. It's about 50 or 60 stocks. I've already got, several positions on in my swing trade portfolio. But what I'm spending more time doing, while I'm waiting for the market to get going. And we've been expecting a good cyclically bullish November, which pretty much all happened on Monday with that 1,500-point move. So I'm thinking that the month is done. We'll dive into that in a bit more. But what I'd like to take away from today, as usual, is it doesn't have to be time intensive to find something to trade. So we're going to focus again on, like, how do we find now stocks? How do we find opportunities that is consistent to find? It's not complex to do. And because I'm just a poor farm boy who figured out a few things. I figured out what buttons to press, and sometimes they're in the right order, which lends me to I'm not a Wall Street guru. I've not worked in the city. I've worked with a few people who have been in the city. My original career path before I was taken very briefly and possibly terminally ill back in 2001. Just prior to that, my career choice was to actually go and work in the British Wall Street, go and work in the city. And this was circa 1997, 98, and had my eye on the big smoke. And then everything went digital, because my idea was to go and be, I thought it was a broker, but the reality is I wanted to be a pit trader. That was one of the dreams. I didn't know what it was called. That's how naive I was back then. But that's what I wanted to do. But then the summer of 1998, Barclays got rid of 800 pit jobs. They went digital with the first of many closures in the trading pits. And it went digital. It turned out it was a good thing, because fast forward a few years, that allowed me to crack the code. I was diagnosed with Crohn's disease. I was housebound. I was in the man cave, aka the bedroom office, way back then. And yeah, I had nothing to do. I had nowhere to go. I was housebound for about 3 years. I had already a passion. I was hand drawing charts from the early 90s. So this was kind of like when I went full time. And because of that digital transition to online brokerages, and back in 2001, 2002, this was all brand new. This was brand new technology. You could still phone your broker. My first, many trades were phoning the broker to go and push the button for me. And now we can push the button ourselves. So that allowed me to crack the code. I figured things out very, very quickly. I'm what most people might call these days a lifestyle trader. It always shocks people when I speak to them. I like to speak to traders. As you know, I'm a talker. I'll hop on a call with anyone who has got a passion for trading. I've got a lot of time for serious traders. And it always surprises people. They always presume I'm really busy. And yeah, I've got other things to do, but it doesn't involve work. I like to enjoy my free time. Most of my mornings, and bear in mind I'm in the UK, so right now is my afternoon. So most of my mornings I've spent reading a book, a coffee. I do a little bit of writing every now and again. So I've written. Clearly, I'm well educated. I've written about 1,000 words today. Kind of journaling, diarizing. I've jotted some thoughts down about some things. I've got a few business projects that I want to kind of get on the go. So I've just kind of goofed around most of the morning. And then we get to today, been given some thought for the last hour of what I'd like to try and impart and show you today. So I've got a lot of free time. So that's generally what most people would consider a lifestyle. My idea of a lifestyle is not sitting on a beach. I've got no interest in having sand in parts that shouldn't have sand in. I like to enjoy my creature comforts. And as you probably gather from the way that I speak, and I like to laugh and giggle and joke, I'm generally a fucking idiot, and I'm okay with that. I came to terms with my stupidity many years ago. But when you've had a priest stand over you, give you the last rites, I think I would rather look on the bright side of things and have a laugh and a joke, because I've been in the situation where today's the day, son. Goodbye. It was a great ride. So I want to enjoy myself. That's really what it comes down to. And that's why I try and emphasize that every week. I've been trading full time. As you know, full time is not really full time. Full time as in it's my main gig, if you like, for my bread and butter. But it's not time intensive. And that's one of the things that I want to impart with you today. I started hand drawing charts in the early 90s, sitting in front of CFAX, if you remember that, or whatever the equivalent is in your country, surfing through the TV texts, trying to get 20-minute delayed data. I've called most of my trades out since in real time, managed funds, specialized in Forex for 12 of the last 20 or so years. And right now I focus on stocks, stock options, and occasionally dip my toe in the futures markets. For no other reason than I can't be bothered sitting in front of the screen. It requires a little bit of extra time. Options allows me time freedom. I don't have to babysit the trades as much as what I might do if I was trading the traditional way. The one thing that is consistent through the years is I am the type of guy that stops tourists to see if they need directions. It's just in my personality. So I am absolutely obsessed with enabling you to see your own measure of success in trading. And that's what I typically do. Again, one of the reasons why I generally love talking to serious traders who want to try and do what I do and do what other traders have done. So that's what we're going to look at today. So with that said, let's dive into now or never. Let's go and look at the markets. That's why we're all really here. We don't really want to see Phil's slide deck. I spend hours looking at them. So as always, the first thing that I'm going to do is when I look at the markets, it's not really looking at the chart, although that is a part of it. Every week we start off this way. I'm looking at the markets and I'm looking at this percentage, these percentages. That's what I'm looking at. Then I'll look at, although I've scribbled over them, then I'll look at the kind of the point value, but that's where my eye is drawn first and foremost. It's not the chart. What I want to see is overnight, has there been any movement in the Asian session, in the European session? Has there been any movement? Because what we have now is essentially 24-hour futures markets. So I can see that we're up about half to 8.8%. In normal market conditions, that would be a big move. A 200-point move on the Dow would be days done, Phil. It's a big move. Right now, in the current volatility, it's kind of quiet. So it's all relative. So that's what I'm looking at. Sometimes we'll see 1%, 2%, 3% movements, which would be big move in today's terms. But we're starting to see, 200 points on as a kind of like the quiet end of a reasonable move. The big thing that I've been looking at now, we've got the chart is that spike on Monday. Wowza. So one of the things that we were talking about in the past few weeks is a post-election. So the elections were here, we had it confirmed, and that big spike was Monday. So one of the things that we were talking about was, okay, last week we commented on, okay, it looks like we've got a range, and we were down here at the time, and we speculated on that. Now we're post-election. There's no reason to not trade, but one of the things that we were looking at was November is going to be, and historically is a cyclically, I can even pronounce it, let's try it twice, cyclically bullish month. So historically, post-election, it's usually bullish. Cyclically, November, December, it's usually bullish. So that's what I mean by that. It's a seasonal trend. Just like we might see heating oil is typically bullish because there's more demand in the winter because there's more usage. That would be another example of seasonal trend. So November's typically bullish from some recent research that I've been looking at with cycles and seasonality, which again, it's just one of those things that's on my to-do list for research projects. That's one of the things that came up in that research. So that's what I was expecting post-election to see that bump for November. Now, I don't know if you noticed, we've already spotted it. That move happens, that 1,500 point move happens pretty much all in one day. So that big spike there is probably what I would have expected to happen over the next sort of 15 to 20 days. So it went up to there. We went from here. So maybe we were going to see over, 15, 20 days, that nice steady trend, maybe something like that over a few days, but it all happened in one day. And maybe we'll still see some further trending movements, but after such a big blow off, and that's what that is, a huge blow off, I can only presume, again, just to update the viewpoint, is that we're going to see some pause, some sideways. If you imagine the market having just sprinted in one day, 1,500 points, the market's out of breath, so it's going to rest. Other metaphors are, the tide goes in, the tide goes out. So we've just had a storm, and there's a calm. After the storm, it always seems calmer because obviously the storm is crazy. There's lots of metaphors to use, but that's, what we're seeing. So we're probably going to see some sideways. That's what we're seeing right now. Maybe if we just flip it over to the weekly, then what it might suggest is, well, with 1 day to go, this is probably going to be a spike again. I can't see that there's going to be 1,000-point move higher for the market to close on the highs. And whenever I see spikes like this, whenever I see signs of exhaustion, is how I usually refer to them. Usually the following bar, the following time period, and now we're on the weekly charts, then I would have to assume that the next week is going to be a narrow range bar. I'd like to be wrong, but I've got to make that assumption where we see that narrow range of movements. And again, you don't need to take my word for it. It happens all the time. Whenever you see spikes, whenever you see indecision, whenever you see those wicks on the candles, usually the following week is narrow ranging. Now, there may be a subsequent trending move following that, but there is pretty consistently, I'm marking them off, just the ones that are very obvious. You can see that it's a pretty can everyone see what I see? First of all, I've circled them to make it really obvious. Just give me a little yes or no in the chat box. But that's what I would expect. This is history telling me that, you know what, for the next time period, we're probably going to see a narrow ranging week. So further consolidation is what we're expecting. Now, it may be that price sells off and drops. I can't discount the possibility that another scenario is it just drops like a brick. And it goes down to, well, where could it get to? Let's go back to the dailies, actually, now that we've emphasized the points. So we've got our scenario. We know that price is range bound. It's tried to break out. It's tried doing something new. It's not doing it. We've just seen on the weekly that this is probably going to be our exhaustion bar. So we're possibly, and we can't say for certain, no one can say for certain, but possibly going to see a narrow ranging week. Now, the other scenario is that we see a sell-off because we're in a range and we've got the sign of exhaustion. It's tried going higher. So another possibility is it could be going lower. Now, my first scenario, the primary scenario, is to pause for a week first. And then likely that will then turn into the bearish move, the downward movement turn into the primary scenario. So we're probably going to have both these things happen. It's just which one's first. I think we're going to see a narrow ranging week followed by a bearish move because nothing new is happening. We're still inside the range. And price has tried doing something new. We've got this confirmed range. So something new happens. Same thing's probably going to continue. It probably will unfold in the form of resting for a week and then bearish. That's what I'm expecting. Where could it get to? Down to the range lows. So that's what I'm thinking is going to happen. Last week, I was cyclically bullish. I think we've had the bullish move. I think it's done. So I'm not bullish is maybe the phrase that I would talk about. So ways that I could trade this, I could sell call options and collect the premium. And because I just don't think bullish is the direction. If it was going to go, it would have gone, in my view, post-election, because historically that's what normally happens. Something different's happening this time. And it may be that we pause for right up to the end of the month. We'll still have that bullish November. So cyclically, seasonally, it'll still be bullish. So maybe that pause through, and bear in mind, we're 15 days in, well, 13 days in. So halfway through the month, another 7 days would take us to, a week before the end of the month. So maybe we start to see a little bit of a sell-off. I'm just trying to kind of speculate and think about, okay, well, what needs to happen for November to still be bullish? Because that's historically what normally happens, but then still have this scenario unfold. So it could be that this sideways is a little bit extended, which takes us to the end of the month, which means that we're going to see 2 weeks of sideways, which means that the November bullish seasonal cycle, that unfolds and happens, and it's recorded and it's on paper and it becomes a historical fact and continues to be a historical fact. I'm waving my arms around. I don't know why. I'm not on camera. And then the bearish move happens at the beginning of December. That's a possibility. I'm just trying to kind of put some time horizons on this. So that's what I'm thinking for the moment. That's what I think the way that the market could unfold. And it's all based around nothing new is happening. Well, if nothing new is happening, then this ranging price activity is going to continue. But then how do we overlay that with the historical and seasonal bullish November? So how do we fuse those two things together? So that's all I've done. It's nothing clever. It's nothing creative. It's nothing fancy. It's just trying to think about what might happen next. What are the possibilities? There's only 3 scenarios. It's going to go up. It's going to go down. It's going to go sideways. So that's all I'm trying to do is this little complicated hop, skip, and a jump to figure out, okay, well, what could happen next for all of those things to be true? That's all I'm thinking about. So with that said, that's one thing that's going to be unfolding on the markets. So maybe I can influence that with, maybe I look for bearish stocks because I'm thinking that the market might be pausing, resting for 1 to 2 weeks, and maybe bearish, moving lower. Again, not trending low, just oscillating. It's still in a range, but maybe I can influence my trade choices with that. So that lends us to the, how do we find stocks? How do we find those now stocks? So I've got my market hypothesis. I'm neutral to bearish. And how can we go and find opportunities that might help us to place that trade? How do we place that trade? Because the scenario that I'm thinking about is I'm not bullish on the market as a whole. So I can think about selling options, not necessarily on the index, but I can start thinking about selling options. I could collect premium because I don't think the market's going higher for anywhere from 1 to 3 weeks. We've just figured that out. So maybe we go and look for some stocks. Let's go hunting. I could do my best Elmer Fudd impression and go hunting wabbits, but nevertheless, let's do this. So what I've got here is, quick slurp. What I've got here is, it's a list of my, I refer to it as farming. It's a big list of stocks. These are actively traded stocks. They've got options because I usually trade options. And they typically trade an average of around 1 million shares on average a day. There's a few stocks that may or may not be on that list, which might meet that criteria there, but nonetheless, that's what this list is created from. So there's two scans I'm going to look at. So firstly, I want something to trade today. And the second thing we're going to do is we're going to look for stocks that might be swing tradable, that meet that criteria that or that would fulfill that scenario that we've just looked at. So the first thing I'm going to do, because I want to do it before the market opens, we've got about 6 minutes. So how do we find now stocks? I'm going to, following on from what we've been doing the last few weeks, I'm a little bit more active on the day trading. We've been through the strategy. I've got a lovely apple peeler strategy is what I usually refer to it as. And the easy button to find stocks is to sort my universe by the dollar change. So we've just sorted the stocks there. And then the next thing we're going to do is look down the pre-market volume. So this is live. I don't know if you can see that. So I'm looking down the pre-market volume and I'm looking at the stocks that have a reasonable dollar movement. So they're gapping pre-market, and that gap may be sustained because there's a lot of pre-market activity. So we can filter them quite quickly. So Zoom looks interesting. It's up $3 and sorry, my apologies. It's down $3.64, and it's got nearly 200,000 shares traded in the pre-market trading. So the market's not open. It's already trading activity. The only people who are trading in those levels are institutional traders. Retail traders are 100 lot traders, 200 lot traders. They're not trading in any quantities. So when there's 50,000 shares or more traded pre-markets, that's probably some institutional trading. And when you certainly see the hundreds of thousands of shares traded, its typical daily average is 11 million. So as a percentage, that's a good percentage of its daily total. And that 100,000 or that nearly 200,000 is going to be on the daily total. So when we go and look at something like Zoom, this is a symbol ZM. We can see, again, I've got the pre-market trading bottom left here on the 5-minute chart. Can everyone see this? It's a little bit dark. Let me just draw it on. We can see that overall, the daily chart here on the right is moving down. Short-term downtrend. We've got a rally in a downtrend. It's gapping lower, but it's not just going from one level to the other. It's actually traded there in the pre-market. So we've got this nice thrust move. We've got this pause, just meandering sideways. So that is a nice thrust and pause. It's a nice pullback. So maybe there's a further downward movement, and it's in context with that daily chart. That could be interesting. I like that. So this could be sell the rally in a downtrend. Again, we don't need the multi-week, multi-month trend. It's very, for a day trade, where's it going? Sell the rally in a downtrend. It's gapping lower. So this could be a good day trade opportunity. So what I'm going to do is I'm just going to pop that on my, on my scan here. So zoom, there we go. That's it. That's how easy it was. I've got a few bullish trades. We'll go and look at those in a moment. I already did that yesterday. So you can do this after hours. After market hours have closed, you'll see something similar. Again, I'm not seeing anything else with, 50, 60, 80, 100,000 shares. Maybe Sony, it's done 76,000 shares. It's only gapping down 20 cents. So it's not a big gap. I'm not that interested. Again, dollar up this time, same process. Amazon, it's up $11, not a great deal. 40,000 shares, not really. Oh, Disney catches my attention. There we go. Earnings yesterday. 500,000 shares traded, gapping higher, $5. And you can see that after hours gap higher consolidation in the after hours trading and pre-markets. But what have we got here? It's a consolidation on the daily. It's already gapped higher. It's already retracing, and it looks like a gapping high. If we were swing trading this, it'd be buy the dip. So maybe this is going to ignite some bullish movements. So I'm going to pop that on my day trade scan, DIS. That looks interesting. And maybe there's a day trade. I'm actually thinking that there might be a way to leg into a swing trade. I've been looking at this for a while. Again, if we just go back to the dailies, so I can use the day trade scan. Or I've just seen your comment there, Enoch. So, Enoch's picked that up. He's tagged Disney as well. So what I'm thinking here, although this looks good for a day trade, we've got a nice range here. We could trade the break of the pre-market range, trade the next pullback. That's what we do. Find a range. There's the range in the pre-market. Day trade the next pullback on a 2 or a 3 or a 5-minute chart. I'm on a 5-minute chart. So trade the push and the pullback in the usual way. But then when we look at the daily chart, which is what this is, I can see that we've got this multi-week range. We've already had the breakouts. We've had this retracement. So buy the dip. So maybe there's an opportunity to use a bullish day trade to get into the swing trade. Can everyone connect those dots? So although I'm looking for a day trade scan, I'm looking for a day trade opportunity, I can use that same day trade setup. Oh, this looks interesting. Someone's really active in it now. I can use that to maybe Disney looks really interesting. Cool. The market's just open. So let's quickly just scan, because obviously the volume's going to get bigger. But JD looks interesting. 1 million shares traded in the pre-markets. Again, we're just opening. Same deal here. We've got price in an uptrend. It's gapping higher. We've got a nice pre-market trend on the 5-minute charts. So that could be interesting. This has been on my watch list several times in the last 1 to 2 weeks. So let's pop SQ back on the list. I've got loads to potentially look at. What else have we got there? So we've got my apologies. That's JD, wasn't it? SQ. My apologies, folks. I just called out the wrong one. SQ's next. So let's just go back. Let's just correct that. JD. There we go. Okay, so we're looking at Square now. The previous stock was JD, so my apologies. It actually looks really similar. Now that the market's open, I'm not looking at the 60s. It's not really gapping anywhere. The market's open. So again, I'm not so enthused about SQ. So I think, again, I'll go back, take that off. So JD, just to confirm, that was the one that was gapping again. There's the 5-minute chart's the big chart now. Let's just go back to the one. And just quickly, what have we got? Cisco, 3 million shares. Earnings yesterday. Let's see if there's a gap. There we go. So again, what I'm looking at here is just looking at the 60s is we've got this range yesterday. Again, on the dailies, we can see it there. we've got this break above, again, this is the daily charts, break above prior resistance. So anyone who was short here, stops are probably going to be there, is what I'm thinking. So we're gapping above resistance, and this could be quite pivotal. So this $40.70-ish, that could be interesting. So I think what I'd like to, again, looking back at the 5-minute chart, we've got this lovely pre-market range. So I think what I would do here is, because we're gapping above resistance, I'd be more inclined to be bullish, because we're gapping above that prior resistance could become support. So I'm going to ignore the downside move. And if it breaks above 41.75, then that break above the pre-market range, that could be really interesting. That could be really interesting. Looking up and left, where could it get to? It could go up to there. So although it doesn't look much on the daily charts, that's about, $1 to $2. $1 to $2 move. So from a day trade, that could be interesting. Is it a swing trade? Is it a swing trade? If there was lots of space here, if we were gapping above that level, then looking up and left, there's nothing really in its way until it gets to there. So I don't think there's a swing trade, but maybe we can get the setup on the day. So maybe it rallies on the day above that level. So that's what I'm thinking about. So again, just casting my eyes down, I'm not really seeing anything that's not already on the list. There's plenty to choose from. The market's now open, so I'm going to just go back to my other list. So what did we have? What do we have? What was that one? That was Cisco, CSCO. So a little bit of earnings, CSCO. So what we have, I've got my little day trade list. That looks interesting. I've got my Apple peelers. So let's look at the regulars. So this is Apple big charts now, 5 minutes. So just want to have an understanding of the regular stocks, my core list. Apple's not really doing anything. It's not gapping anywhere. So probably it's going to carry on meandering sideways. It has been for a while. Same with Microsoft. It's been kind of dithering all week. 60s is bottom left. IBM is pushing a little bit higher. So we've got a little bit of a gap. Again, not really doing anything that's exciting. Most of the week on these stocks has been sideways. IBM, Facebook is pushing a little bit lower. Again, you can see bottom left here, it's not really been doing anything. A little bit of a trend, a little bit of a retracement. If anything, I'm more bearish on Facebook. So if we break through yesterday's lows, it could be interesting. NVIDIA is having a little bit of a gap higher. It's up a few dollars. But as you can see, same as a lot of the tech stocks, they're not really doing anything. So the regular stocks don't look great. So that's my little core list. I'll come back at 10 o'clock. So in 25 minutes, maybe something interesting, but I'm not expecting anything is what I'm thinking about. So that leaves us with, these are the stocks that are gapping and we're looking interesting. Both yesterday, we've had Zoom, which looked interesting. Let's go and take a look at that. Now, interestingly, Zoom, looking at the 60s, not really doing anything on the 60s, but, sell the rally in a downtrend is what we saw on the daily. Dailies is now relegated to the top left here. I don't need it in my primary viewpoints. So what I'd like to see, we've got that push. There's the pullback that I was talking about in the pre-markets. So I'd like to see price push lower again, develop the same pullbacks for an entry. I'm really going to check these at 10 o'clock for my preferred entry setup. But let's just skip through now. We've got the 5 minutes on the big charts. Disney, I'm looking for a bullish trade as we've established. So one of the patterns that I'm thinking about here is we've got the first push is down. So I'd like to see it springboard back up and create this V-shaped pattern. I'd be looking for a break above that pre-market range, so above $142, and then trade the next pullback. That'll be interesting. If that was to happen, I'm going to trade the swing trade on this. It looks interesting. I've been keeping an eye on Disney for this for a while, and this might be the trigger into a potentially good trade. Ian, I can see your comments on the Q&A button. I appreciate that you can't, you're having some problems with the chat box. So I'll see your question. So TTGT is what you're looking at. Let's have a look. So we've got a TTGT. That's a bit of a tongue twister. So this is one that Ian's looking at. He's just posted one that he's looking at. Let's look at it on the other one. So let's put the daily on the big one. So TTGT. So this is tech target. Okay, cool. So first thing that catches my attention, nice uptrend, little bit of a gap. I'm not seeing any pre-market activity. So for the scan that I like, it's not that interesting. The volume so far is only a few thousands. So this wouldn't typically come up on the way that I like to scan. It doesn't mean that it's a bad trade in. It just means that I'm looking for a now trade. What's moving right now? What's everyone trading? So that's why I'm looking for those, 50, 60, 70, 100,000 shares traded in the pre-markets, because that's what the big traders, the institutionals, are looking at right now. And that's important for me, because if I just want a quick trade, if I just want a quick in and out, jump on the shirt tails of the money flow, then that could be a good indication for me. It's no guarantee, but it's just it's an odds enhancer. So that's what I'm looking at and why I'm looking at some of the stocks. Again, this looks great. From my point of view, it's rallying. Buy the rally in an uptrend is not something that I would do. I would buy the dip in an uptrend. So that's what I'd be thinking about. Now, if I was going to do something on this, because of my bearish market overview, so let's switch it up. So we've looked at some day trading stocks. Now, they're my right now need to do something. I've got 20 minutes before the pattern that I look for sets up, because I use some time-based entries when I'm day trading. I just want to check in at 10 o'clock. I want to put the trade on, and then I want to take profits 30 minutes later. Ezekiel, I've just seen your comment. You've got to go. Great. This has been recorded, so you'll be able to catch up with the other stuff later on. I'll post the replay in there for you. So we've looked at some day trade opportunities, and let's see if we can tie in the broad market view over the next couple of weeks. The 1 to 3 weeks were neutral to bearish. And more specifically, I'm not bullish. So this might be a good example of I'm not bullish, and we've got this rally in an uptrend, a little bit of an exhaustion on the daily chart. It might carry on going higher, but if my viewpoint on the broad market is bearish to neutral, then one of the things that I might be interested in here is selling calls. So that would express the not bullish viewpoints. Again, I don't necessarily think that it would sell off, because I'm not a counter trend trader, but I can express the not bullish viewpoints by selling premium, collecting premium, and selling calls in this case. So by selling calls or call spreads or call butterflies, there's lots of ways to put the trade on to collect premium. By doing that and putting the trade on that way, I don't need the stock to go up. I'd like to go sideways, but I'll get paid quicker if it does go down. In fact, if we do it right, we can get paid if it goes up by small amounts. So that's what I'll be thinking here. And that's what I'm going to look at next. So we've looked at some day trade opportunities. We'll come back to those in a moment. I might run the session over a little bit longer, just so that we can see if we can find 1 or 2 setups that look interesting. There's that Cisco turnarounds that we were just speculating on. Okay, so let's now think about, I'm going to just pop the, let's now think about, so daily chart is here, 60 minutes is there, and the 5 minutes here. So I'm going to focus my attention on this column here. So this is percentage change, and it's going to look back at the, percentage change. I think I've got it set to 5 days. Let me just check the settings. So what I can do with this indicator is it looks for the percentage change, but not on the day. So this percentage change, net change, is looking at, okay, what's the change from yesterday's close to right now? So that's that column. But this column here is telling me over the last 5 days, what's the change? So it's going to look at the price right now and compare it to the close price 5 days ago. So what I'm looking for is percentage change. Surprise, surprise. So would it be fair to say that let's go, but firstly, let's go to ES. So S&P futures. So there's the S&P. So let's just remind ourselves. So right now, I'm neutral to bearish. Neutral to bearish. So it can either go sideways or down. That would be a great scenario. So sideways or down is what I'm looking for. Now, specifically, I am not bullish. Not bullish. It doesn't mean it can't go higher, but that's my viewpoint right now. I am not bullish. I am neutral to bearish. So neutral in the next week, bearish in the next 1 to 3 weeks. Does everyone understand? Does everyone remember? Like we spoke about this earlier. So how do we find stocks? How do we find stocks right now that we could use to express that neutral for the next week and possibly bearish in the next 1 to 3 weeks? I'm going to look at percentage change. And percentage change over the last 5 days. Percentage change over the last 5 days. So what I've done this time is I've looked at stocks that are in and have rallied the most in the last 5 days. Does everyone see what I did there? All I did was double click. So I've sorted the other way. So these are stocks now sorted the other way. These are stocks that have fallen in the last 5 days. So BIIB, woo, look at that, 32% in the last 5 days. Okay, I've got my scribbles over there, but nonetheless, let's just tidy that up. That's a big one. So what I'm looking for to express my neutral to bearish, I don't want to find stocks that are already selling off. Nothing wrong with that. But what I can do is look for stocks that are in rally mode. So ICPT, this is Intercept Pharmaceutical. I don't really need to see the 60s or the 5s. I'm looking for a swing trade now. So I'm looking to find stocks to express my bearish, neutral for the next week, bearish for the next 1 to 3 weeks viewpoints. And the first one that we find is ICPT. It's up 30% in the last 5 days. Can everyone get on board with the fact that 30% in 5 days is not normal? Can I just get a holler from everyone? Does everyone agree that that's not normal? 30% in 5 days. Absolutely, Tony. Absolutely. Yeah, kind of like a leading question, but yeah, it's a leading question. But it's not normal. It does happen, but it's not a regular thing. Now, when we look at the chart, now I'm looking at this, it's going down. So we've got this rally in a downtrend, and I wasn't expecting to see this, but you would think that it's going up. But we've got 30% up in the last 5 days. It's not normal. So maybe it's overextended. And then when we tie in that neutral to bearish viewpoints in the wider markets, then this could be a good candidate. So I can sell calls, or I could actually buy puts, because technically this is sell the rally in a downtrend, but I could certainly express the viewpoint of, well, not bullish because it's overextended. So that could be a great swing candidate. I could sell calls or buy puts, or maybe I could do both. Similarly, we've got VLO, Valero Energy. This is up 20% in the last 5 days. Similarly, it's kind of meandering sideways. Could we sell the rally in a down? I wasn't expecting to see downtrends, if I'm going to be honest, but nonetheless, Ulta Booty. Now I'm already looking at this. This looks in. So now we're looking at this chart. We've got price in a range. I like this because it's already going sideways, and it looks very similar to the S&P and the wider markets. We've got that big spike, and we're below the range high. So this is almost a carbon copy for our neutral to bearish viewpoints. So I like that. I do like that. So what I could do is I could express the viewpoints of not bullish by selling calls or call spreads. It's a $260 stock, so I could possibly get in A broken wing butterfly is one thing that I could do and express a synthetic naked short position. That's one thing that I can do with high dollar stocks. So I could sell. It's still a fancy way of selling calls, but essentially, if you're familiar with the pattern, I could do again that naked broken wing butterfly. The broken wing part is deep out the money, which gives you this synthetically naked short position. So it's basically a short premium play, but it's got a little bit of protection built in. If you get the directional move, that'll be great. You get paid quicker. So that's what I'm thinking with Alta. I like Alta. So what I'm going to do, I'm actually going to, oopsie doodle. Pressing all the wrong things. So let's go on to my fishing tab. Let's go on to, I'm going to pop that onto things that I'm liking the look of. So I've got a little discretionary section here. I'm going to pop Alta there because I'm probably going to price that up later. And I'm thinking that could be a good short premium play. Does everyone see how quick we found that? I think the thing that I want to take away is when you've got a framework, the framework of when we look at the charts, we want mechanical reason to be looking at the chart. Mechanical reason is I'm looking at the percentage change. I've got a viewpoint of neutral to bearish on the broad markets, and I'm looking for stocks that maybe I can express that viewpoint. I could put it on the markets, but I could equally look for stocks to trade as well. So the mechanical reason to look at the chart in this case is the indicator. In this case, it's percentage change. So that's my mechanical reason for looking at the charts. That's step number one. Step number two is visual confirmation. I'm not going to write it out, but step number two is visual confirmation. Okay, what's this chart doing? Now that I'm looking at it, what's it doing? Does it conform with my expectation of my discretionary viewpoints up here? Well, yes, it does. It's in a range. It's trying to break out. Nothing new is officially happening. Therefore, until something new happens, the same thing's probably going to continue. So that visual inspection is checking for, is it going up? Is it going down? Is it going sideways? Well, it's in a range. Okay, great. So now I know what the trend is. Till something new happens, same thing's going to continue. Step number three, place the trade. So I know what trade I'm going to place. I'm going to be not bullish. In this case, I can sell calls or call spreads. I could buy puts and trade it directionally. I could do both of those at the same time and stack strategies. So that's what I'm thinking about. And what I want you to take away is the speed at which we found something to trade. The speed at which we found something to trade. Step number 4 in the production line is trade management. TTM. You're going to hear me say this a lot. This is my kind of depth of understanding. My understanding of my own system gets greater every time I'm doing this. Every time I ask questions and every time you guys and girls get involved and interact with me, and I've got to explain what I do. This is the result. My understanding of my own system gets better, and I'm always trying to simplify and improve it. So the TTM is we're going to time out, target out, or exit out. TTE, my apologies, TTE. So timeout is after a period of time, usually 20 to 30 days. I'm either making money or losing money. So we're going to time out. I'm going to close the trade. Take what we got. Target out, trade does what we think it's going to do. Exit is another way of saying that stop loss. I don't use stop loss with options. We've got it built in. But exit in this case would be, I've got to take it all the way to expiration. So exit or expiration. If you're spread betting, if you're using stocks, if you're trading futures, whatever, anything other than options, basically, you would have a stop loss. So a predetermined point where, you know what, it's not doing what I think it's doing. So let's close the trade. I'd take a small loss and walk away and find another opportunity. In the options world, I'm going to take that to expiration. So that's the production line. Mechanical reason to look at the trade, visual confirmation of what it's doing. If everything lines up, place the trade. I know what I'm going to do in this case. And then 4 is going to be the trade management side of things. So that's the production line as it stands in the much improved and simplified production line process that we know and love. And that's pretty much how I've been trading for the last 20 or so years. So Ulta looks good. All I'm going to do is go down the list. So not Bud looks like Bud looks like the opposite. Bud looks like a breakout. So maybe that sideways to neutral or neutral to down, this creates a retracement to buy the dip on that breakout. But Bud looks interesting. I like that. It looks like a good breakout. I don't think it's a today trade because of that neutral to bearish viewpoints. So maybe what I do with this is I put it also on the watch list, BUD, and I keep an eye on it. It's not a today trade because of my neutral to bearish viewpoints. So keep an eye on it. Tater, what is it? TTM, oh, TDD, my apologies. Trade Desk. So similar thing. What do you think, folks? Does this look overextended? It's a nice, strong uptrend. So do we think that this is a retracement in an uptrend? It could be. But again, remember, I've got the neutral to bearish viewpoints. So I could sell calls. I don't think I would buy puts because we're in an uptrend on this occasion. Don't want to step in front of the bus, as it were. Or I could leave it alone, or I could wait for that neutral to bearish viewpoint, give it 1 to 2 weeks to see if there's a deeper retracement and see if there's a deeper dip to buy the dip in a very clearly well-established uptrend. So this probably is a don't worry about trading it, but it might be after my 1 to 2 weeks of kind of like the short-term viewpoint is unfolded, this might be a great candidate to buy in the kind of whatever the next phase of movement is in the markets. So it's just keeping me out of this trade, that viewpoint. Can everyone kind of get that? That viewpoint that we've got, the neutral to bearish viewpoints, might keep me out of this trending stock because I'm expecting the market as a whole to be kind of neutral to bearish in the short term. So this has come back to it in 1 to 2 weeks. Or unless my viewpoint has changed on the broad markets, then this might be a great buy the dip candidate. So again, just skipping through. What do we got? Marriott. There we go. Marriott. Consolidation, kind of horizontal to slightly angled lows. Extreme boundary high here. So it's tried to break out. We've got that lovely reversal V. So maybe that bearish to neutral viewpoints comes good. I'm liking Marriott. Let's pop that on my list. I'm probably going to be thinking about selling premium on Marriott as well. So MAR looks good. Now, because I've looked at MAR, maybe what I do is I follow Alice down the rabbit hole. Let's take a look at Hilton Hotels, HLT. Now, HLT looks a little bit different. Can we see that price on Hilton compared to Marriott's? It's gapped higher, so something new is happening. Whereas if we go back to Marriott's, that, just rather convenient, but the place on the chart, it's tried gapping higher, but I would still class this as nothing new is happening on Marriott's. So if I was going to trade Marriott or Hilton, it's going to be Marriott because Hilton is doing something new. And because I've got that bearish to neutral viewpoints, then maybe Hilton's the breakout trade, but I don't trade it for a couple of weeks. Whereas Marriott is, it's underperforming by comparison. Right, and travel. Well, we've just looked at Hilton. Let's have a look at EXPE. So same thing here. We've got that Expedia group. These are the online booking agents, as I recall. But we've got it breaking out. So something new is happening. So this is, it's just not today. It's doing something new. So with my bearish to neutral viewpoints, this is like, don't worry about it today. Come back in 1 to 3 weeks, unless unless my viewpoint changes. So I need to update my overall market viewpoint in the next 1 to 3 weeks. And if it changes, then something like this might be back on the card. So if we see price on the broad market start to go above the consolidation and the bullish scenario, although it's the least likely thing, if that starts to unfold, then I can start going back to HLT, Expedia, some of these breakout stocks. Whereas at the moment, I'm just looking for something to express that neutral to bearish viewpoints. But I think everyone gets the idea. I mean, it's pretty straightforward. It's one of those things that takes long to explain. I'm just going to go through these last few quite quickly, but this is the speed at which I would normally go through these things. I'm just looking for something that meets my requirements, meets my criteria. I'm just gone back once or twice looking at the same two. So OHI and AXP, they kind of meet that same requirement. So I'm just going to highlight those two. I'm just going to copy them. Let's go back to my kind of main thing. Let's add some space. Put them there. So I'll come back to those. I can investigate them properly later. All I'm looking for is find a reason to look at them. These are gapping higher. We've got RCL looks interesting. We've got CVS Healthcare that looks overextended and in the range. I've had some great day trades off CVS. I've had some great day trades on this, on that rally up. It's been gapping very nicely. So maybe that's overextended. Had some excitement, but we're up to that resistance point. Technically, we're still in the range, despite the fact that it's done this monumental move. I do like the fact that we've had this V-shaped pattern start to develop. So if it goes below that level there, then I can do, you know, not bullish type of trades and start selling premium. I could buy puts. There's nothing really in its way until it gets down to $60. That could be interesting. So maybe I could do both not bullish and sell some premium and use that income to buy some puts so I get a free trade and a free ticket on the bearish move. Again, just looking at, again, a little bit of speed because I want to go back to the short-term trades. We're almost on 10 o'clock. I'm going to go 5 or 10 minutes over. But I'm just looking for something that kind of looks like those other charts that we were just looking at. I'm looking for the best of the best. Again, just going back, HIG, this is Hartford Financial Services. It's in a range. Maybe it's breaking out. It's at that cusp of looking like it's breaking, but still technically in the range. I could add that to the list if I wanted to. CVX, Chevron, looks like a sell the rally opportunity, but it's typically the process is reasonably fast. Typically, the process is reasonably fast. I've just seen your comment there, Ian. Yeah, I like having the tabs. I like operating it like a spreadsheet. TradeStation has some built-in tools. In fact, let me just get that. Let me just get them up. Where is View Trading App Launcher? TradeStation has a lot of built-in things. It's a really powerful piece of kit, and it's well worth it. Again, I'm not getting paid to say it. I've bought into them. There's lots of other platforms that do similar. I was looking at a few scanning softwares, just external to TradeStation, but TradeStation got so much that's built in. I can find the gapping stocks. If I want to look at all of the equities, then I can pretty much scan everything and it will give me the top 25 stocks that have gapped. It's got all of these built in. Like, I like to do it in the watch list, as you've seen. I've already pre-filtered my universe of stocks, Ian. So again, it really is worth it. You know, it just makes finding something to trade and organizing everything so easy. I've got lots of templates and layouts and tools, and you know, you're already in the member community. So if you do sign up to TradeStation, Ian, let me know. I'll send you a copy of all the tools, the templates. I've got some custom. I've had some customizations on the standard indicators so that they display better, just so that I can read them a little bit more easily. So I give them all to any of our insiders who sign up to TradeStation. Again, just because it's a nice thing to do. It just gets you started. But if you wanted to, let's just say, we just did that percentage change over, we just did the percentage change, but on the last 5 days, I did the percentage change and ranked and sorted them out of my universe of stocks. So my universe of stocks is about 500. So I'm not looking at penny stocks. I've pre-filtered them. I'm not looking at low floats. I'm looking at stocks with options that are tradable. They're liquid. I'm going to get a good price for them. Because what I don't want is penny stocks, low floats, crap fills, shit slippage, all the bullshit all those nightmare stories that you hear about brokerages. It's because of the stock, not the broker. You know, so I'm trading the best stocks, the most liquid stocks. I'll get a good price, a good fill, a good execution. That's what I'm doing. So the downside to TradeStation is I think you can actually upload your own stocks, so you can like search your own universe. But for speed, I've got it in this watch list on the left, the scan, if you like, but you've got the built-in scan. So these are stocks that have gapped up, but I can look at the percentage. What have we got? Percentage gainers in the last 5 days. What a surprise. There's a pre-built. So if you wanted to look, let's just say that you actually wanted to look at every possible stock. You've got, look at this one, 376% in the last 5 days. It's a $23 stock. I don't know why you would want to trade that, but let's just say that you did. Let's go and take a look at it. Let's just blue symbol link it. There we go. Let's take a look at it. So I don't know why you would want to trade like a $6 stock, but if you wanted to, all right, thanks, Jacob. Just seen your comment there. Have a great day. I'm going to go a little bit over today because we're looking at some scans, and I just want to kind of go through the day trade scans because we're just on 10 o'clock and see if there's anything for us to trade. But if you wanted to, you know, that's certainly a gapping stop. You would have found that on the gap scan. You've got that built in. And if you looked at TradeStation's, like, show me everything that's gapping, that would have picked up. And clearly you would have had a great time trading that, because it's gone then from 16 to $24 on a, you know, a $20 stock. That's a huge percentage gain. So if you wanted to trade 100 shares or 500 or 1,000 shares, it's going to be inexpensive on that. I don't know if options are available on it. I typically want to trade options. So that's one reason why I've got my pre-filtered universe. But yeah, if you want to trade individual stocks, you can trade anything. You know, the same process, the same principle. You know, this one's gapped and moved quite nicely. It's a penny stock. There's probably some news. It may be a pump and dump type of opportunity. Getting the quantity of shares that you want relative to your account might be difficult. It depends how big your trading account is. If you wanted to trade 10,000 shares on this, if you've got a really big account, it might be difficult because it's probably a low float type of stock. Volumes usually about, or at the moment is about 2 million. And so it's 2 million on the back of something going on. That's not normal volumes, probably going to be really thin. So just be aware of what you're trading is all I'm saying. So that, again, just highlighting another reason why I like my little pre-filtered universe of stocks. So where we close the window. Don't need that anymore. So you've got lots of pre-built scans anyway. So hopefully that helps you. Bruce, yes, you can. Let's go and take a look at the VWAP strategy. So is the VWAP strategy applicable to the Qs, the SPY, Dow? Yes, you can. Yes, you can. So what VWAP does is these dotted lines in the center there, this is VWAP. So right now, just by chance, looking at SPY, you've got a nice little pre-market range, breakout. There's the pullback. So SPY is giving the setup, Bruce. So if you wanted to trade just by pure chance, you asked the question, there's the answer right there. Yes. But that's what we're looking for. So it's above the, mechanical, take the same process we went through earlier with the swing trades. Mechanical, above the VWAP is going to give us, direction. It's either bullish or bearish. And in this case, I'm just going to cycle through the stocks. I've got a short list of stocks. It's easy to look at them. I've got the stocks that I want to look at. So visually, it's the same thing. I'm going to look for a bullish or a bearish. So above or below the VWAP is going to give me bullish or bearish. And then the visual is, confirming that. I want price to be going up or down. So mechanical reason, visual, we've got price going up, multiple green candles in this case. Then we've got the step number 3, trade the next pullback. There's the pullback right there. So at 10 o'clock, there's the pullback. And then the management, step number 4, is timeout, target out, exit out. So in 30 minutes, it's going to time out, target out, or it's going to stop out, exit out. Anthony, great. So that's what I'm looking for. So it's the same process that we just went through earlier. There's less discretion because we focused on the swing trade stocks as being quite discretionary, because I was looking for stocks that expressed a viewpoint which is not bullish or neutral to bearish. That's the viewpoint that I was looking for. So there's a little bit of discretion. We were overlaying a few things today. So the day trade, the VWAP strategy is I'm looking for momentum. I'm looking for explosive stocks. I've got a short list. NEO, just casting my eyes down the list of stocks here. I can see NEO, which is something that I looked at yesterday. I've got, again, I didn't find this one, DKNG. One of our insiders mentioned it to me. DraftKings is up 6% on the back of earnings. We've got Disney on the back of earnings doing an abysmal 1%. It's not looking healthy. Zoom's doing 1%. Cisco's up 6%. So let's look at Cisco because it's on the back of earnings, a little bit of news-driven excitement. So one of the things that I'm looking for is, I was looking at the breakout, wasn't I? If you remember the daily charts. Daily charts in the background here, but I was looking for the break above that prior swing high there. That's happened. So I'm looking for that break above the pullback, and maybe we get that on the swing trade. Right now, it's not really doing anything. It's not really doing anything. So I'm not worried about that. So let's go through the stock. Let's start off with Apple. Apple's a little bit scrappy. Again, we didn't really expect much from the core list of stocks. We can see it trending, but it's red bar, green bar, red bar, green bar. It's scrappy. I don't want to see that. I want to see a thrust. The mechanical reason, again, remember, is it's on the watch list. So so the visual trend is I want to see the bars stacking up, like you can see there. Multiple consecutive bars is what I'm looking for. So when we find an opportunity, again, Microsoft's, red bar, green bar, red bar, that's not momentum. That's not a thrust move. It might provide a great opportunity, but I'm looking for fast move, quick action, a clear indication. I don't want maybe trades. I'm looking for hell yes, there's the trade. That's what we want. So we weren't expecting much of the again, Apple, Microsoft, IBM, Facebook. Facebook probably the best contender. Can everyone see that? That's what a thrust move looks like. Can everyone see that? That's what it looks like. 1, 2, 3, 4. Looking at bar number 5. That's what a thrust move looks like. Give me a hell yes. Give me a little preach it. I hear it. I see it. Great. Awesome, Duncan. That's what it looks like. Compare that to IBM. Almost. IBM's a close contender for seconds. Microsoft, red bar, green bar, red bar, green bar. Let's not worry about it. Let's go back to Facebook. That's what a thrust move looks like. Multiple consecutive. So that's the visual element. V for visual. That's momentum. That's direction. We're on an express elevator to hell. If you want, or heaven, if it's going the other way. It's going, powering away in a single direction. So that's thrust, that's momentum, that's direction. So it's moving away from the VWAP. So that potentially is suggesting institutional involvement. There's no guarantee. I don't know what's going on truly until after it happens, but this is the footprint. So mechanical, it's on the watch list. We've done the scan. Visual, it's below the VWAP. Great, I'm bearish. Is price creating momentum to confirm the direction? Actually, Facebook is. Okay, so next, trade the next pullback. Do we have a pullback? Has price paused briefly? Do we have a green bar, essentially? Do we have that? No, we don't. That's what needs to happen next. So when that happens, entry below the pullback low, and then trade on. And then step number 4 is TTE. time out, target out, exit out. So 30 minutes later, if you're in the trade, you're going to time it out, take profit, target out, it's done what we want, or exit out for a small loss. That's what's going to happen in 30 minutes. So it's not there. It's not created the pullback. It might not create the pullback. And if it doesn't, we've got 20 minutes. I want this trade to happen by 10:30 Eastern. So right now I've got 20 minutes for that to develop. If it doesn't happen, don't worry about it. At 10 o'clock, is the pattern there? No. Great, come back tomorrow. It's probably not going to set up. I'm not worried about it. This is not a pew active day trading strategy. Now, if you wanted to, if your blood pressure can take it, the setup's on the 2-minute chart. The setup's there. I don't suggest it to everyone straight away. It's a faster time frame. It's not for everyone. But if you're a little bit more experienced, there's the setup on the 2-minute chart. It's there. Obviously, you need to keep an eye on this. If you've got a little bit more time, a little bit more, I can spare an hour at the beginning of the day, certainly the first 30 minutes of the day. If you want to be done by 10 o'clock, trade the 2-minute chart. The 2-minute chart was right there. Again, I want a more leisurely pace because I'm obviously talking through these things. NVIDIA's not quite there. British Airways looking good. Yeah, there we go. So we've got break of the range, rally, thrust. There's the pullback, potentially moving higher. Could be interesting. Got 15 minutes. Duke Energy, not really there. Duke Energy was on my watch list. There was lots of activity yesterday. It was looking interesting. It gapped down yesterday and put a nice trading move in. I was thinking there might be some follow through. It's not doing anything, so I'm going to take that off the list. NEO, same thing. It was really active yesterday. Lovely trend. Gapped higher above yesterday. Not really, again, lovely trend for the day. Again, this is why it was on the list. I found this yesterday, kind of after the fact. Might be a little bit of follow through. It's not looking like there's going to be anything going on, especially when we think about our neutral to bearish viewpoints. So it's not following through. So no big deal. I'll keep an eye on that. NEO was kind of hot in the news at the moment. BYND was the other one. There it is. There's the trade right there. Breakthrough yesterday's low, bonus points, range for most of yesterday. There's the thrust, there's the pullback, and breakthrough yesterday. So at 10 o'clock, is the setup there? Yes, it is. And I've got 15 minutes. It looks like it might be closing above the VWAP. So if that was to happen, game off. Don't worry about it. So it needs to turn around right now. I'll come back to that later again. So although I'm day trading the 5-minute chart, I'm sure everyone can see that although I'm on the 5-minute chart, although I'm technically doing the bunny fingers to the camera that's not on, day trading, it doesn't have to be pew, fast paced. Oh my God, high frequency trading. I'm just looking for, what's the best trade? DKNG gap higher. It's moving lower. Let's not worry about that. So let's come back tomorrow. Let's check out Zoom. Zoom's not looking great. Not fantastic. Again, it's pre-market. This looked the best one pre-market. Pre-market, you've got that trend push pullback. You had the setup in the pre-market. It's not really doing anything in the active session. This in itself could be interesting. This is your consolidation. So it could be a nice little breakout, a little bit of a variation on the same thing. We've not technically got the thrust move in the active session, but in the overall scheme of things, it's in a downtrend, if you remember. So, we can maybe be a little bit forgiving if you wanted to use the setup to get into a swing trade, which is one thing I was thinking about with Zoom, although especially like tech stocks are kind of out of flavor. Zoom, my apologies, Disney looks perfect. It's looks like the type of setup. We've got the thrust, we've got the pause, the pullback. It's right there. Looks interesting. I was thinking it was going to be a nice opportunity to get into a bullish trade. It's not quite there. A little bit of conflict with what I was expecting, so maybe I'll leave it alone. Again, I am looking for a bullish swing on something like Disney, just because I want to kind of get into a bullish swing. It's setting up a bearish intraday setup. So again, I'm going to leave it alone. I'm not worried about it. JD, not really doing anything. Let's take that off the list. I don't need to look at JD anymore. It flagged up Cisco. Let's take a look at that one. Same thing here. I was looking at the bullish swing on the breakout. I'm going to keep an eye on this one because that's what I want to happen. So what I'll wait for is what I'll probably do with something like Cisco is, because I like it for if you remember, it's breaking out of the multi-week range high. So what I'm tempted to do here is be a little bit flexible and maybe go outside of my usual time window for a day trade, because I do want to get the swing trade on this when you remember when we were looking at this. So it could be interesting. So I'm going to be a little bit flexible with that one there. Everything else from just the bog standard day trade setup. Facebook's the one. There's the pullback right there. So assuming that the next bar is the pullback, we've got 3 minutes to go. That could well be entry below $273.10. Got a pause there. That's what we're looking at. Right, folks, I think we're done. We're a little bit over schedule, as I mentioned earlier. Out of all the things that we could have looked at today, Facebook looks like the one for the day. So we'll see if that ultimately unfolds for us. I'm going to take a break. My throat is a little bit raw, but nonetheless, this is the stock of the day. It looks like it's going to just very quickly develop that pullback. Entry below $273.10. Probably be buying the one strike in the money option, whichever one is available, so that I can accelerate that trade opportunity. Something like Facebook, I'm looking for a 1% move. So maybe $1 to $2 is what I'd be looking for on this. Again, it's just a day trade. $1 to $2 will take me down to 270. Right there. Maybe we got a run. It could get to 263. It could do a nice $10 move. Am I going to hold out for that? Am I going to hope for it? If it happens in 20 minutes, because again, when the trade's on, it's got to do something in the following 30 minutes, time out, target out, or exit out. So I'm looking for at least $2, $1 to $2, and it's got the potential to do 10. But if it doesn't do that in 30 minutes, whatever's there, I'm going to exit out. So time out, target out, exit out. But that's the one I'm looking at. I'm going to take a short break. On insiders, we'll carry on the conversation inside our Slack community. If you'd like to participate in our this on a regular basis, I'm probably going to open up a dedicated, well, I've already started to unofficially, but officially I'm going to be opening up VWAP Momentum, profiting from these in the first hour. There's going to be a regular and growing community. So if you want a little help with this, to profit from short-term explosive movements, learn it in the smartest possible way by someone who's doing it every day. Focus on the best stocks, the best times to trade. As you saw, it's one simple pattern. You can learn the intricacies of it over the next 7 days. And there's possibly, well, there's 4 or 5 different versions of this pattern as well. The most obvious one is the one that we went through today. We can look at the TTE trade management system. The money management side of things, as always, is the real secret to any trading success. You've got the overview. It's going to time out, target out, or exit out. It's the same process that we use on the swing trades or the day trades. It's the same logic and methodology. And if you want some help with this to become the best possible trader that you can be, so that you don't have to stress over which way the markets are going today or spend hours flicking through charts. It's only taken an hour for us today when we walk through it because I'm explaining it. The reality is it takes about 10 minutes to do, as as you saw, but just to explain it as it's going along, it still only takes about 30 minutes. But you'll never have to read through boring company reports. If you want some help with all of this to become the best trader that you can be, like, I don't know if what we do is right for you. If you'd like to discuss it further, send me an email, phil@antivestor.com, and we can chat about how this might fit into your trading routine. If you'd like some more information about it, let me know. If you'd like to talk about some of the swing trading opportunities or anything else with regards to your trading, again, I'm an open book when it comes to helping serious traders become better traders. So if you want some help with that, send me a message. That's my unabashed pitch. That was finding now trades, stocks to trade right now. We found one. Let's go and trade it. Folks, I just want to thank you for spending some extra time with me today. Hopefully you found it beneficial. If you've got any questions, comments, feedback, the replay will be in the Slack group in about 20-30 minutes when I've stopped recording. And I will see you in there. So whatever you're up to this weekend, have a fabulous weekend. We're still on lockdown here in the UK. And wherever you are in the world, again, make sure you find some time for yourself. I spent 3 years housebound through illness. I know what it's like to be isolated. So make sure that you get some exercise, make sure that you find some way to relax and unwind. But make sure that you have time to find some fun, to laugh, to enjoy yourself. There are ways to do that through the day, but make sure that should be the priority. It's certainly a priority in my day to find some relaxation time. So make sure that you find some time for yourself today and this weekend. I will see you all the same time, same place next week.